Hi, everyone. My name is Louie Prosperir. I'm very excited here to talk to you about this webinar called Start with the End in Mind. What we're going to do today is look at how you can take a look at your existing practice or firm and see if the model that you've created ties into what you want to achieve with relationship to your ends and expectations. Why do I think that this is critical and important is during the last few years where I've been mentoring and coaching a lot of firms on helping them get through their roadblocks or trying to achieve their transformations. One of the first things that seems to come up and seems to be an issue is the business model that they've created it no longer fits where they want to go or what they want to achieve. And when they're trying to make it fit and work, what happens is there's a strain in the firm, and that usually comes out with staff issues, profit issues, meaning that they're making less money, working longer hours when they look at the rate of return, burnout, and customer satisfaction. It just impacts so many different components. So what I'd like to do today is focus on letting you take a look at where you are today, particularly if you already have a practice, most of you do, and see and do an analysis, and also take a look at where you want to be tomorrow, and consider the things that you're going to have to modify or change. Now, if the reality check that we do says I'm perfect where we are, then that's great. At least you've done a checkup and things are on track. So I'm hoping that that's what we're going to achieve today through this webinar. There's a lot to cover, so I'm going to try to get this done within a 40-minute time frame, because I think that's the limit that I have. And if I run out of time, I might go a little faster near the end. So let's begin with what we do. Now, the reason why I'm bringing this in is because I want everyone to understand that the type of services we provide is not in the traditional sense. We don't provide services like a coffee house does, like Starbucks. We don't do it like a mechanic and so forth. And the reason why I'm saying that is normally these type of services have a location that's tied to it. They have a lot more capital investments related to it. The other thing that's really critical is that there's an end result of a product of some sort, or an end result like fixing my car, getting clean clothes, getting a cup of coffee, having food, compared to what we do, where we end up taking our expertise and knowledge and transferring it over to the customer to benefit their businesses. And that's different. And that's why our firms are normally classified as knowledge firms and knowledge workers. And the other key component that really differentiates ourselves is that our number one asset is the intellectual capital of our firm. And that is a key component, where in a lot of other traditional services, their number one assets, it could be a lot different than that. Okay. So, and again, the reason is the business model is different. So a knowledge firm business model is going to be completely different than what a traditional service model is for the most part. So let's take a look at the number one question that you should ask yourself. And this is the framework question: what size of practice do I want to build? Now, when we start a practice, we normally started as a sole proprietor or one-man show where we wear all the hats, and that's fine. And if that's where you want to stay, that's okay too. But understand, once you've decided that that's the framework that you want, it has its own constraints of how much revenue you can generate, what type of services you can provide, and access to freedom and other things related to it. When you add 2 or 3 people, that also, and you're happy with that size of firm, that has its own limitations and so forth. If you want to build a firm that continues to grow, for example, that then requires you to constantly look at the practice size and modify it. Now, a good example is determine what size you want to end up with. If you want to end up to 20 people, then put that down, because then when you do that, that allows you to have a framework. All right. It doesn't mean that you have to be there today. It means where do you want to be and what's the size of the firm that you want to build. And it's important to understand that. Okay. And that ties into the next question or questions, because the size of practice will impact these questions. Now, these questions are very important for you to answer, and you must put these down and write them down. If you don't, they're just wishes in my book. And also, when you write them down, please make sure you date them and make sure that you have a date objective as well to achieve them. If you just say, I want to make this amount of money with no end date, what ends up happening is it's always in the future. It's never today. Okay. And the first one you have to determine is, how much money do you want to make per year? This is an important one, and understand that these firms have a lot of stresses when you have your own practice. There's a lot of issues related to it. So you're as an entrepreneur, you have a lot of things. So make sure that the financial objective meets the risk and reward that normally ties into this. One way to determine what that would be is, if you, based on where you are today, if you run your own practice, you're probably at a level that you could probably be a CFO or controller for any small to medium-sized firm, organization right away. And what they tend to get paid is usually between 130 to 180, depending on the size of the firm. And what they also get is they get maybe 4 to 6 weeks vacation. They might get profit sharing. Their hours are much more flexible. And the chances of them working above 50 hours a week on average is a lot less. So there are stresses related to being a controller or a CFO in a firm, but it's completely different and not as demanding in my view. If your salary expectation isn't higher than that, then you must ask yourself, why don't I go into industry? Now, I'm not telling you to do that, but that's a question that I think you should answer. And usually what happens is the next question is the non-financial objectives take into gear, and that's probably another determining factor. So let's say your expectation on the finances is between the 130 and 180, fair enough, and you're happy, that's where you want to be. Make sure that you're achieving the non-financial objectives and highlight what they are, so that it then ties in. Now, if you haven't achieved your non-financial objectives, then that's an issue, right? Because you're not making the money that I would think that a professional owner of a firm should be making, which should be in excess of 200,000, and you're not hitting your non-financial objectives, which is, what do you want to get out of the thing? You know, you like the freedom of being your own boss. You like not to be tied down to one company. You like the variety of customers and so forth. So make sure that you're hitting those targets. If not, then there's an issue. The other part about a firm is, what kind of practice do you want? What you should always look at, narrowing the focus of your practice. What type of services you want to provide, who are the customers, and so forth. The more narrow the focus, the higher effectiveness you will be with customer satisfaction. When you try to please everybody, what ends up happening is you don't please anybody, and your customer satisfaction and so forth is much harder to achieve. The other thing that impacts this component quite readily is when you don't narrow and understand what type of practice you want, the pressures on your revenue are also impacted, because when you take everybody in, you also probably take every price or every type of level of customer in, and that also could have a negative impact if you're not properly monitoring it. And the next one is, determine your exit strategy. The journey is the best part, right? In any type of thing we do, the journey is always the most important and the best part of what we do. However, to make sure that the journey follows where you want to be, you need to understand where your exit or where the end result is. And it doesn't necessarily have to be selling. It could be succession where you want to give it to your family. It could be that you want to develop a system where it allows you to have people in the firm grow through the system and then slowly buy you out so that you can focus on other components. There's a lot of different ways to have an exit strategy, but you must define it. So these are the big questions. Try not to be too general in your answers. The more detailed it is, the better it is. Make sure you try to do this in sentence format, not point form. The reason why is point form is not a good way to express yourself. It's better to write down complete sentences. The more detail, the better it is for you to understand where you want to go. If you hit roadblocks and you can't think of the non-financial objectives, or you're having trouble with the professional practice, make it a wish list, right? And then come back to it. Or take a week, go back, look at it, go back, look at it, and keep adding to it or subtracting to it until you feel you've got the real gist or the real objectives that you want to achieve. Spend time on this. This is a critical part of your business. You want to be able to understand these components because it impacts as you go further into your business. So let's take a look at the next step. So now we've done all of these nice, fun things about what we want to do, what we want to achieve. Now, the next step is to take it one step lower. And what this does, excuse me, my throat's a little hoarse, so if you hear pauses, I'm just clearing my throat. So the size of practice is always important. Now, most of you already have a practice, so you will be able to do this quite easily where you're at. And the key thing is identify all of the people that work for you, identify their roles, admin, production, management, and see who does what. It's important to determine that because when you've decided the framework of your practice before, and then you look at the roles and everything, hopefully that they match, right? The next one is the revenue streams. I like to not just have one lump sum revenue and call revenue. I'd like to break it up into three main components. You can go more, but I recommend not to go too many more, maybe one more if you want. And the reason why is you don't want to get too complex at this stage. You want to have a general overview of where your company is. And this allows you to reflect and project. For example, the three main components that I normally see in a firm is what I call corporate, which includes corporate tax, financial statements, all sorts of consulting related to a corporation. And then there's the second part, which is bookkeeping, or what I call management services. And the third one is personal tax. The reason why you want to split these up into three categories is because you want to be able to, like, let's say you want to grow the business from here to there. The percentage mix that's developed here will most likely be reflected in the level that you go up. It just seems to work that way. Once the model is designed a certain way, as you grow, if 30% of your business is tax, the chances are, and when you continue to grow, it's going to be around 30%. It could be 32, 28, but it's still going to be 30%. And same with the other stuff. So that will allow you, as we go further through this process, to understand what growth looks like in the mix of your revenue. The other part is your major categories. And again, there's no need to go into a lot of detail at this level. And the three categories that I look at is staff and subcontract costs, because again, the staff is going to be your biggest cost in most cases. The second one is usually you or the owners. And the third one is the operating costs. And or it could be you as the owner is the number one because you're the primary person, but between staff and sub and owner, those will go up and down. And that's important to know how that works. The next level that you have to do, is determine the type of billing methods you want. Now, you can go from one billing method to the other. You can have a combination of billing methods. That's perfectly fine. I'm okay with that. But you have to understand what that is, because how you bill will determine your revenue streams and how much money you can make. It's interesting, but it does have an impact. Now, I'm not an hourly person. I definitely subscribe to the value pricing model. I'm okay with fixed fee. I think that that's a much better system than hourly. But here's the thing. If you carry a WIP, if you track time, sorry about that. If you track time for billing purposes, you're just on a modified hourly system. You're just on a modified hourly system. And that's basically where it's at. Fixed fee means it's a fixed fee. It doesn't tie into the hours. Hours are basically designed, in my view, for capacity and workflow management. If you're using hours to determine how much revenue you're going to generate, that doesn't flow with the other three models. It's basically an hourly billing model. If that's where you want to be, that's perfectly fine. If that's where your comfort level is, I just find that that's the least effective way to generate value for your customers and the least effective way to increase profitability, because when you do it based on the hour, your focus is internal, meaning that you're focused on your internal cost structures, and where everybody lives is externally. The valuation has nothing to do with you, and we'll go through that a little bit later. It's subjective based on the customer's perspective. So if you change your billing model, you'll change your focus, and it should reflect in better profitability and better customer satisfaction. The final one that I have here is the customer portfolio review. The indication of how many customers you have in each category is important. What this means is, for example, one customer is not one file. One customer can have 10 companies. That's one customer, because if the customer leaves, he takes the 10 companies, right? So make sure that when you determine the number of customers you have, you base it on customer, not files. All right. The other one that I'd like you to track is, and it's on the reverse, is how many personal tax returns you do, which means if there's a family of 4, that's 4 tax returns, not 1, right? And this allows you to understand the number of tax returns. The importance of this is there's a spreadsheet that I provided for you to understand how the capacity limitations of your firm tie into the number of customers that you can effectively manage and provide service for. So it's important to understand this, and it gives you some understanding of where you are today. Okay. Now, SWOT analysis, I'm not sure if all of you have heard of this. It's basically a strength, weakness, opportunity, and threat analysis. People put this on a chart or whatever, and they do this for their firm. They look at their strengths of their firm, their weaknesses. I am not a big fan of this on its own. I really don't think it's very effective. It tends people to be too narrowly focused, and it tends them to go down rabbit holes that may not be realistic. And I've been a party to these in the past, and usually what happens is they're in what we call management retreats or management things where people go together and strategize, and then it sits on a piece of paper somewhere, and then we go back and revisit them, and nothing's done. Okay. It's just not effective on its own. So what I did was I decided to bring in something a little different for you that has SWOT analysis, because there is some benefit. And I'm just going to go through this very briefly because I don't have enough time to go into any detail. The first part of this program is what we discussed earlier, what size of practice you want, the total revenue, method of billing. The reason why I want you to write these down is because it's important to do this as part of your SWOT analysis. Don't do the SWOT analysis completely independent of this. It doesn't really be effective. The other thing that I need you to do is, what are your goals? Like, what's your work-life balance? What do you enjoy about the practice? What makes you want to come in every day? What are the fun parts of the practice? and be as detailed as possible. I'm always going to go to you complete sentences, detail, and write them down, because that really helps you focus and do this. And the reason why I want you to do this is if someone else had to read this and understand what you put down. If you put down point form, usually what happens is someone will have to ask you, what does that mean? And then you give them 4 or 5 sentences. So that's a very important thing. What do you want to do in 5 years? Where do you want to be in 5 years? The most famous question. You do that when you hire people and so forth. This is important because you want to know where you are today and where you want to be in 5 years. Even if you're at my age and, in mid to late 50s, it still matters. Or if you're in your 40s or 30s, the 5-year plan is always important. It doesn't have to be, ridiculous. It has to be realistic. It has to be something that you want to achieve. And it's important to write it down and constantly upgrade it, because 5 years is always 5 years, right? The next year you have another 5 years. You know what I'm saying? Based on that, and you've had time to think about it, you're going to look at it and go, well, what can stop me from achieving my goals? What are my objectives? And this is really important because you want to identify things that might stop you, or things that are stopping you today, because those are the things that you're going to need to address. Why do I want to achieve these goals? You have to understand your why. What drives you? This is more a philosophical point of view of your practice, but it's the thing that makes you get up and out of bed every day. It's the real reason why you do things. And it's important for you to look at that and really think about it and write it down. And then the other part is, what are the hidden roadblocks? What are my roadblocks? What is that? And I know this sounds weird, but as an owner operator, these things are important, whether you're going to succeed. And we all need to refocus on this on a regular basis. You don't have to look at this every day or have a vision board. I mean, if you want to, that's up to you. But the point is, it's important for us as professionals to go back to our whys. And the whys could change over time. I mean, if you did this on a regular basis, I bet you your whys at the beginning are different than your whys today, and that's perfectly fine. But then you also have to modify everything else related to it. General thoughts about your practice. These are what I would like to say, pluses and negatives about the practice that you think of you have right now. And then you go into your SWOT. Talk about the strengths of your practice, look at the weaknesses, look at the opportunities and threats. Now you're doing this about the practice itself. What this does is that the original SWOT analysis, but now you're going to then review it with what we discussed at the top and make sure it makes sense, because now you look at the top and you look at this, well, that doesn't tie in. The threat's not really a threat. I just, it's off base, or the threat's real, but my objectives up here are, I'm not going to achieve them based on this threat, and I have to change something. And then your exit strategy, like we said. And here's a part that's really important. When you do a SWOT analysis and you stop there, it's totally useless unless you develop action items, put timelines, put what you want to achieve, and put them down here. So after all of that reading, you then have to actually develop action items, things that you can work on and put into place. The other thing that you have to do when you do these timelines and you put these action items in, make sure that you take a look at, do I have the time to complete it? Or who's going to complete this? Or who's going to work on it? Because if it's not you, make sure it's someone else, and make sure it's part of their jobs and responsibilities at the end of the day. So if you put a timeline and you put an action item and then you say, well, I have no time, well, what's the chances of you getting to this action item? Right? So understand that once you put the action item, you're going to have to make the time to do it, and you have to actively open up time. All right. So that's what I would call a SWOT analysis with some meat around it and some contextual components. If you do just the SWOT analysis, I'm not a big fan. All right. So I know I went through that very quickly, but you'll have the schedule with you, and it will allow you to go through it. So here is the next step. Now we did, like I said, what we did right now is we We looked at the framework. We looked at the general questions. We then did the next level of questions that you would have to answer about your firm. And then we did an analysis of it. And then we developed some action items. So now let's take a deeper look at the actual company. Now we're going in a little deeper. The three components of the company basically is your customers and outcomes. And the reason why I did that initial thing about at the very beginning is the knowledge firms are all based on outcomes, how our knowledge impacts the customer, not what we do, not how we do it, or how accurate we are. It's all about the outcome. Like, what does the end result of our service or what we provided in the transfer of knowledge impacts their business and their lives. And that's really important. And so the customers and outcomes is a critical part of your practice and how you generate revenue. The next part is the production side, and staffing is critical. If you don't have the right staff, if you don't have the right skill set, the right culture, whatever it is, it doesn't matter the customers, you're not going to hit the outcomes, right? So staffing is another critical component. And the last one is your systems and resources that you give and utilize to be effective, efficient in your firm to make sure that you achieve and allow your staff the ability to meet their goals and needs. So let's start with customers and outcome. We're going to really focus on this part because it's the main part of your practice once you get down to this level. And what I want to talk about with regards to outcomes is that they really fall under two categories. You're really providing either advisory services or consulting services. That's knowledge firms, that's where we generally live. And as you can see, the consulting services are much easier and more narrow, and they're usually the ones that we're able to bill and price properly because they're problem solving in nature. We are problem solvers and we know how to solve problems. The outcomes are very clear cut. We provide a tax return, a financial statement, and so forth. They're narrow in focus, and they tend to be reactive services. They tend to be people come to us and they have an issue or problem and we resolve it. Advisory services are much harder and more important, excuse me, but what it is it works on the big picture. It tackles the main goals of the organization, you generally being a sounding board, and it's a proactive process. Now, you provide both. I guarantee you that you do both of these. Unfortunately, in my experience lately, when I look at firms, they're pretty good at pricing the consulting services, whatever method they have, but the advisory services, they tend to give those away for free. It just happens over the course of the interaction with the customer. And what we end up doing is putting them together with the consulting services. The customer then has no understanding in the sense of the valuation is they value the advisory services tend to be more, but because we kind of give it away and we don't frame it properly, the monetization of that is very weak in most firms. Now, some of you have mastered that and have done a great job, and all the best. When I see it, I'm very happy and I'm very excited because it's not the norm from what I've experienced to date. So what does that mean, advisory and consulting? Well, I want to talk a little bit about what the customer does. So where does the customer live? Where do we live as humans? We tend to live in the future. I know, and the reason why I know that is because I'm always planning for tomorrow. My calendar, and I bet your calendar, is booked for the next 3, 4, 5 weeks, right? So what are we doing? We're always planning for the future. We're looking at what comes next, what happens next. And so does your customer. Your customer, excuse me, so sorry about that. Your customer really, really focuses on their future, and any type of service that we provide related to mitigating risk, helping them manage and become more profitable, or looking at things that they could avoid or achieve, they're willing to pay more for that because that's where they live. The second most important part is today, what I need today, because I live in today, and there will be issues that I need to get resolved that are today's consequences. And again, when it comes to value and relevance to the customer, the value is higher today than it is in the past. So because most of us don't live in the past. I'm going to paraphrase that as you get older, you do start talking about the good old days. And I guess when you're at a certain level, you talk more about the past and the future. Fair enough. I know that I'm at my age, I'm doing the good old days more than I used to. But the reality is, when it comes to the businesses that people run, they tend to focus on the future. Now, don't get me wrong, that the value of providing services that related to historical information are valuable, but when we put them in context with the other two components, they're not as valuable. And you can have a very successful practice if you focus on historical. The risk with historical information is that the technology and the automation that's coming on board allows more competition. The customers are getting more sophisticated, and their ability to get that information for less is increasing. So the downward pressure on the revenue stream tends to be highest on historical information. And I know you know this when you're looking at your fees related to anything that is based on historical. And so what does that mean? That means that we always have to look at the customer's perspective and the outcome. And what is the outcome related to? Future, current, past. Sorry about that. My throat's a little craggly, and I'm trying not to do this. So here's I love this one because technically this is a really cute picture, and what I really enjoyed about this is what type of services do we provide? And what I've done here is I've narrowed it into 5 different categories for you. And I'm not going to go into too much detail, but as you can see, each category, you can put a series of services. And that's why this exercise is here. So what I'd like you to do is part of your exercise after this session is look at these and list all the different services in there. Try to get at least 5. Again, more detail, point form isn't effective. If you say data management and tracking is bookkeeping, detail the bookkeeping services, okay? All right. So we're going to move on to the next section. And this section is about your team. This is the most critical component to make sure that when you do the services that you're providing, that the outcomes match the needs. And your team is critical to that, how you build the skill sets of your team, who you bring in, and how they work. So I can't stress this enough. You should do analysis related to your team, and I'm going to go through some of them in a few minutes from now. I can't spend too much time here because I'm running out of time, but what I would like to do is take a look at the key components related to your staff. Now, I did this on purpose. It's all over the map. As you can see, I put things over in the left, over the right, the bottom, the middle, the bottom. And the reason why I did that is because all of these things have value and they're all important. And it doesn't matter what order you do them. I think you should do them all at one point. So one of the things you should always do is have a system that you have assess your current staff skills. That's not performance appraisals. That's staff skills, because you want to know what skill sets are in your firm. Outline who does what. That's another thing. What do they do? Because it's important. Who's the quality review person? Is it you? Is it someone else? What services are you providing? Then you go in and list the services that you're providing, because you want to be able to match them and see if the skill sets, so you're providing 15 services, right? And then you outline to who's doing it. And if you're the one that comes up with 10 of the services, you're the only one that can provide. That could be an issue, particularly if your firm is bigger than you, right? If you have 3 or 4 people and the majority of the services are yours, the same with quality review. So Where is the staff risk issues? Do you have a backup plan? When you're a smaller firm, what happens is your team has multiple things that they do. So you have to identify what happens if I lose this person or that person. Where's my backup plan, right? What's my next step? And that's something you should always look at, because when a critical person leaves, and that does happen, what would I do in that? And normally what we end up doing is we end up dealing with it, but usually we either work another 30 hours a week, or we put a lot of stress on the other team, or we lose customers, or all of the above, right? And then the analysis, the skill assessment analysis, is a tool that kind of puts some of this stuff together. The other thing with the skill set analysis is look at reassignment of your work, right? Excuse me. So a great exercise is outline all of the stuff you do. Now, when I ask partners or owners to do this, they have trouble getting all of the stuff because they're always hopping around all the time. So when I look at the list, it's very small, and yet they're working very long hours, right? What I would suggest is, like, if you were doing a diet plan and people say document all of the things you eat every day, do this for 2 weeks, document everything that you do per day. And that way it'll allow you to see all the different things you do. And then your next step is to reassign all that work to other people, right? And what would be interesting to do is, if you can reassign it to other people, great. If what happens is there's nobody to assign it, that might be, you might have a staffing issue. Okay. And here's something that I utilize all the time when I talk to people and I go into their businesses. The first thing I ask them to do is I ask them to put down their customers, not their staff people's names, what they make annually. I don't care how much they make per hour. I just need to know what their annual salary is. And even if they're hourly, just determine what the annual amount is. It's important for me to understand annual. Then I ask to see whether their production admin or manager, which again is important, and their job duties or skill sets. Either one for me is interchangeable. Then on the other side is my wish list, like, am I short staffed? What do I need to go to the next level? What's the staff that I need? Is it a production person, admin, manager? What do I have to pay these people? What are they going to be doing? So that allows you to see how much more costs you're going to bring into your intellectual capital to hit your levels that you're doing. Okay. Then there's you. If there's two of you, you have two of these. And what's interesting here is I want you to do that list that we talked about, break it down into these 4 categories. And then on the last part is reassign it all. Now, it doesn't mean that you're going to reassign it all, but if you have blanks there, that means that there's gaps in your skill assessment with your team. Technically, your team should be able to do everything you do, particularly if you're a firm that's over 5 staff members or 4 to 6, because you're getting to a level now that you should be able to allow to readdress that component. And the last one is identify key employees, find out who they are. If there's only 3 of you, all of you are key employees, right? But once you go to 5 to 6 staff members or people, there's always going to be 1 or 2 that are key. Identify who they are and look at, well, if this person left, where do they go and how do we reassign? Okay. This is very important. And this part will allow you to constantly update and make sure this works, because understand capacity is finite. The amount of customers that you have is finite. All of that is very, very finite. I would love to go into more detail in these 2 areas, but I would be running out of time. So there's one more thing that I'd like to talk to you about, and it's this thing here. Hopefully this comes over. What I'm going to do, just to make sure that this works, just bear with me. I'm going to stop share. I'm going to reshare the screen so that it shows up. All right. Did I bring it up properly? No, I did not. Okay. All right. Bear with me. I'm going to pause the recording. Hi. Okay, I paused the recording and I'm back here, and this is what I wanted to show you is what I wanted to show you is with regards to your customer outcomes and outlooks. So remember how we talked about the number of customers you have and so forth. What I'd like you to do is do this kind of system. Now, this is for 5 to 6 staff members. So what I did here, and this is one of the things that I do when I work with someone, is I try to identify their customer mix. So this first is the corporate work. If there's a bookkeeping component, we can do, excuse me, for bookkeeping, but I'm just going to do corporate and T1s for today. So what I do is I ask them to identify the number of corporate customers and the level of revenue from each section. So, and this is a fictitious company, by the way, but the numbers down here do meet what I normally see in a practice. So the lowest value, whether it's under $100,000, this customer, this firm makes about $95,000 with customers under this level. Between the next level, between 1 and 2, they make 156, and so forth. Now, as a percentage of their revenue, you can see the bulk of it is in the middle usually. But what's interesting is the number of customers. When you go down this way, 248 is the total customers that they would have at this level based on this mix. And if you take the 190, which is well over 50% of their customer base, it doesn't even come to 50% of the revenue. Now, the volume of the customers matters because the higher the volume, the more work it is, even though the revenue streams are similar, right? Large customers demand a lot of resources, but so do a large number of smaller customers. Now, if you're here and you want to grow your practice, right? So, and these people did, and they wanted to go from that number to 1.1 million. The way you can do that to see what it would look like for you is once you've determined these components, understand that your firm is probably going to grow in similar measurements. That you're not going to go and all of a sudden eliminate these under 1,000s and bring everything and only bring in $10,000 customers. It just doesn't happen, right? Because when customers leave, new ones come in, and they're going to come in similar to these numbers. For you to make a change in making sure that you want to eliminate anything under $1,000, you have to make a business strategy and redesign your services and so forth to move it up. All right. So just be realistic that if this is your mix, when you grow to the next level or grow your income, the percentages are going to be similar within 2 or 3 points or maybe 5 points of each other. And now I want to show you to get to 1.1 million, excuse me, they're looking at 486 customers. And again, look at the numbers down here. Now, at 5 to 6 staff, that's not doable anymore, right? So you're going to increase your staff. But understanding managing this number of customers is not going to be just doubling the staff. It could mean that you might, instead of going to 10, you might go to 15 because of the complexity of managing this larger volume of people. And don't forget, the big customers, now you're at 10. These guys always demand more resources, and that's the same thing again. Now you look at your T1 program. So you have $150,000 in T1s, and it's about 698. It's not that bad. But again, you take a look at if your billings of under $150 is 65,000, that means 550 of them are under $150. That's a high volume. Now, when you want to increase, same deal. What happens? You went from you didn't even double. You went up $100,000, and yet look at this number, right? That's a huge volume. So understand with your volume and the size of your company is based on the customer portfolio. That's why I keep talking about the portfolio, because if the mix is a certain mix, the chances for you to change that mix takes a lot of energy and effort. And here we look at, if we look at this thing, we look at where you are today, 710,000. You're not even doubled your revenue, but look at the number of customers you're managing. And my guess is if you're at 6 staff members based on this thing, you're going to be at 15 to 20 members related to the complexity of the number of customers you have to manage. This is a good exercise for you to do to see what growth looks like in the future. Okay. All righty. So I want to thank everyone today. And what I wanted to end it with is, this is where you are today. I hope the questions that we have in the format that we've done allow you to assess. And I would love to see you be able to go where you belong into the future. If you want to get a hold of me, I'm on linkedin.com. Just go Louie Prosperir and you can get a hold of me there. I work with the Successful Bookkeeper, and you can get me through LP at strategicclarity.ca. Thank you very much, and have a great series.